AMD stock is about to report earnings in a few days, and the stock in the past few months has gone up over 100%. The stock is also trading at higher valuations compared to its average. Is the market expecting too much from this semiconductor giant? And what should investors keep a closer eye out for? Let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so first, I just want to start off with my overall thoughts. And then after that, what I want to do is take a closer look at some of the main data that investors should consider. The first thing we're looking here is forward PE ratio. Forward PE ratio for AMD right now is sitting at 41.09. This is way above its median of 33.01. So it does seem like the stock is trading a bit overvalued compared to its normal. Now, I want to start off with my thoughts. And first, the stock has run up over 100% in the past 3 months. That definitely creates a lot of volatility. So in the short term, I believe there is room for extreme volatility. If after earnings, you tell me the stock drops about 10-15%, I wouldn't blink an eye. I would say the stock was up over 100% in the past 1 month. If you also told me, hey, look, the stock is up 10% after hours, I really wouldn't be worried as well. I believe right now this is a stock that has either one, it's priced to perfection, and any hiccups could create a massive sell-off, or any great showings can create more of an AI momentum. And this is the thing about earnings. I mean, you might be wondering, Jose, this pretty much didn't help. I mean, if there's any YouTuber out right now telling you what's going to happen after earnings, it's just a 50-50 shot. Now, what I think is definitely possible is long-term, this is a company with a market cap of $278 billion. This is a multi-bagger potential in the long term of things. I think in the next few years, this is easily a $500 billion market cap company. Again, it's not a guaranteed. And just because that market cap can happen, it's not going to go in a straight line. And that's why it's crucial. It's crucial for AMD investors to know what they're investing in, because there could be a lot of volatility. Stock prices can drop down dramatically. And if you get weak-handed, you're going to miss out the overall opportunity that's ahead. Now, I want to start off with revenue consensus, and this is what the market is expecting for kind of their quarter two revenue. Now, just a quick backlog on June of 24, so last year, the company made about $5.8 billion in the revenue. Last quarter, March of 2025, the company reported roughly $7.4 billion in revenue. Now, as we look from these charts, and these charts you can find at fiscal.ai/Jose for 15% off. It's the greatest platform if you're serious about investing. And links are down below. But for June, we can see there's not much more growth expected on a quarter-over-quarter basis. But versus a year ago, this is expected to be up 28% year over year. Now, one of the main things is right now AMD did get hit with export restrictions to China. Even though those kind of went away, it still affected almost all of that quarter. I think actually all of the quarter it did affect, so there wasn't any real change from that. Now we can see that the other thing that's going to be crucial is the guidance the company gives. For September of 2025, guidance is expected to be roughly $8.3 billion, a nice growth sequentially and a nice growth year over year. More importantly, it will be one of the record quarters in the data center revenue market. So that's what we're expecting here. Now, if we're looking at earnings per share, company right now, last year did about 0.69. Last quarter, it did about 0.96. This quarter is expected to do roughly 0.48. But then again, a nice growth. Next quarter is expected to be guided at $1.16. Again, because of that China export restrictions, they had to write off some things, and that kind of impacted June 25. But with the reinstatement of being able to send some chips back to China, there could be a lot of wonkiness here for earnings per share. So the company is most likely going to share non-GAAP numbers, and also non-GAAP excluding any of these changes happening from the Chinese space. So that's going to be a crucial one to look at, and make sure to look at that one first before kind of having any form of freak out. Now, I just want to kind of showcase some of the things or important information that we've heard from AMD's AI event. They mentioned that the AI market is expected to continue to grow dramatically, $500 billion by 2028. Inference, which is a market AMD believes they can be strong at, is expected to grow at an 80% compounded annual growth rate. We see from other companies like NVIDIA that this is on par. We're about a $1 trillion market by 2028. This is all data center capex. This is just AI accelerators, which is usually 50% of AI of data center capex. So a lot of companies are on par here. Some other things in AMD has mentioned, right? There's sovereign AI. 7 out of the 10 largest AI companies use AMD instincts, and so much more. So now let's also take a closer look at some other things. But this is your first time here. Make sure to hit the thumbs up. Make sure to hit the subscribe buttons. This is going to be the best place. You're going to find any AI semiconductor news for free. Also, check out the pinned comments, like I mentioned, a lot of great offers there. All right, so earlier I gave you the Q2 and Q3 revenue consensus, but now I want to kind of break it down of what the market is expecting between its segments: the data center, the client, the gaming, and the embedded. Remember, now the client and the gaming are being put together, so it's pretty much three markets, but it's great to kind of see this right now. So for the data center market in Q2, we expect about $3.24 billion. Now we can see the Q3 outlook with the growth of the MI350, with the reinstatement of some certain Chinese customer potential. This is expected to be guided at $4.1 billion roughly. That is a massive growth. And as we can kind of look at all the other numbers, that's going to be driving most of Q3 guidance. Now, Q2, we can see is also going to be driven by the growth in this data center space. Now, if we look at client for Q2 is expected to be roughly 2.56 billion, driven by just more market share gain by Ryzen and AI PC market. For Q3, expect another $100 million growth there. Now, the gaming for Q2 is about 7.78 billion, so $780 million there, mainly from recovering from console adjustments. In Q3, actually expected to be of a bit of a decrease there. The gaming console market, remember, we're kind of like year 4, year 5 of the Xbox and PlayStation, so not much growth there. Now, one that gets me pretty excited is the embedded market. The embedded market is expected to be about $829 million. There is still softness in the industrial market, but for Q3, we expect some guidance of some growth year over year and sequentially, and that's about $920 million. Now, the embedded market, for those that are not familiar, is a very lucrative cash flow business once it starts growing. So that's going to be able to really create a nice tailwind, especially if you have data center growing like crazy and you have the embedded kind of turning back up. That is a great tailwind for the rest of the year and the rest of next year as well. Now, I kind of want to look at some recent analyst sentiments from the markets. We can see on July, or in just the past few weeks, we've seen a nice amount of re-ratings on the stock. UBS gave it a 210 from 150 in a buy. Main reason is an update bias from the MI350. We also see kind of possible China export resumption. Bank of America gave it a $200 from 175, a buy. They added more on their data center GPU revenue forecast for 2025 and 2026. Now, some small firm that I'm not too familiar, our Radar Research gave it a 223, which is the street high, and models massive growth in data center through 2027. Morgan Stanley, another one, 185. This one gives it an equal weight, but lifts AI chip demand forecast, but neutral on valuation risk. Now, some of the things that investors should consider, or recent news. The first thing is, as we saw earlier this month, or in July, U.S. Commerce Department to resume reviewing licenses for MI308 AI chip exports, and it potentially add about $500 million to $1 billion in revenue over the next 2 quarters and restore a $1.5 billion in annual revenue. So that's pretty exciting. We'd love to hear more guidance there. The second thing is the AI chip pricing power. There have been a few reports out there that the AMD's MI350 has increased their price compared to previous generation, kind of signaling strong demand and competitive confidence. And it's still much cheaper than the Blackwell alternative. So that's going to be a question for sure that will be discussed. Now, some other investor deep dives. and focuses during the earnings call is AI revenue and trajectory, right? We need to learn more about the data center GPU revenue progression. Are we going to get an actual guidance of what data center GPU will do? The adoption rate of the MI 350 and the 355X, customer pipeline development, and any software ecosystem. They did just have the AI event on June, but any new updates from there, especially with customer pipeline development, it will be crucial. Also, another crucial market that I mentioned is the Chinese market recovery. How does this look for the second half of 2025? What is inventory looking like, and what is the pricing dynamic in the Chinese space? Now, competitive positioning. Are they gaining AI accelerated market shares? This is something they're going to discuss. Any major customer wins and deployments. We keep hearing those rumors of Amazon's, and maybe a little bit more discussions on the MI 400. How are things progressing with their rack scale solutions coming up in the next generation? Anything with the competitive landscape would also be great news. Now, some of the risk factors, and I think the two major risk factors are one, high valuation. High valuation just means that the market is expecting a lot from AMD, and even though they could have a great quarter, it could create short-term stock price headwinds. Now, again, that's why I said, as a long-term investor, I don't really care how the price moves. I still believe this is a multi-bagger opportunity, even from here. And if the price dips, it could be a buying opportunity. Make sure to stay tuned to this channel. But as long as earnings are okay, I could care. I would say I'm not too worried about price action because eventually financials win. The second thing and the biggest risk is NVIDIA competition, right? We still have NVIDIA's earnings and the competitive landscape here. Are they giving up any market share? What are the performance looking like? What are customers switching over to? So those are the two biggest risk factors to valuations, in my opinion. The overall high expectations. But like I stated in the episode at the beginning of the episode, short term, I think there could be a lot of volatility, extremely volatile, and the stock could definitely drop after earnings, even after a blowout earnings, because it might not meet that pitch perfect expectations. Long term, I'm still extremely bullish. So I'm not a trader. Maybe if you're looking for trading advice, this is not the channel for you. But if you're looking at some thoughts in the long-term mentality, I think this is a multi-bagger. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.